Monetary policy, which is what the Reserve Bank does,
Yep.
is one of the forms of controlling an economy, either up or down, that the Australian government has in place. They have other things like fiscal policy, etc. But let's just put all that stuff aside because we've got elections and whatever, different governments and all that sort of stuff. But just look at monetary policy, because that pretty much happens all the time, no matter what. Whether there's election, there's not election, whoever's in government doesn't really matter.
Correct.
The reason the RBA puts the official cash rate up is to make the cost of money within the system, the banking system, the markets, to make it more expensive, so that when a bank or a lender, even like Yellow Brick Road, we want to charge our client an interest rate for the money we lend them, we will charge them more because we, generally speaking, try to maintain our margin. So that you've got, unless your wages have gone up at the same rate or your tenant's paying more rent, then you've got less money in your pocket, which in theory should say to you, the borrower, I'm going to spend less money.
That is a fantastic summary, because again, one of the discussions as we've started this rate hiking cycle, and we've got to remember, until May, we had not had a rate hike in Australia since 2010.
Yeah.
So it was our first hike in about 11 years. And so a lot of us weren't used to it. What happens when they hike rates? And when you think about what the RBA are trying to do with monetary policy, with interest rate hikes, and it's not just consumers, it's the business sector as well. We know a lot of businesses have got debt and overdrafts and all the rest of it. What they're aiming to do is to say to people with a mortgage and a business loan, for example.
Or a credit card.
Or a credit card, correct. Is to say, hang on, we don't mean to be nasty. In fact, on the contrary, we want to manage the economic cycle. And if you are still spending rapidly with interest rates being really low, then the local shops all around here will keep increasing their selling prices because, hey, people are coming in, they're buying my coffees, they're buying my holidays and air tickets and all the rest of it. So inflation's very high. By hiking interest rates and saying, well, hang on, I've got to pay an extra couple $100 on my mortgage repayments or my business loan, whatever it happens to be, I'm still okay. I don't like it. But hey, maybe we won't go out for dinner tonight. We've just got to hunker down. So the business can't increase their selling prices at the same extent. So the whole economy slows down a little bit. That's the aim. We've got to remember, the aim of rate hikes is to slow the economy down so inflation gets back to the 2 to 3 target. And unless you lose your job, we Aussies know that we will make our mortgage repayments come hell or high water unless there's an absolute catastrophe that occurs in our life. But, we know that bad debt levels are generally pretty low, which is a good thing. But it means that we just divert our spending. The economy cools down. In a year or so, inflation will be back down, and then we'll discuss, dare I say it, interest rates being on hold for maybe 6 months.